Mr. MK Surana joins us now, Chairman and Managing Director of HPCL. Mr. Surana, good morning. Thank you for joining us. Let's talk about performance for HPCL for the quarter gone by. How much of the profit surge in HPCL is because of inventory gains and what has happened because of the Forex gains?
So as far as inventory gains are concerned, in this quarter, we have got inventory gains of 1,323 crores compared to 343 crore for the same quarter last year. As far as exchange rate gain is concerned, it is 297 crore versus 82 crore last year.
So operationally, how the refining segment has been, and also in terms of volumes, what were the key products?
So as far as marketing is concerned, during the quarter, in fact, that the good thing is that we had a positive growth of 2.7% overall. And that was better than the industry, which was 0.3% on the industry basis for all the petroleum products put together. So this was the first quarter where we had a positive growth after the corona pandemic was set in. As far as petrol was concerned, it recorded a growth of around 6.4%. Diesel had a growth of 1.2%, and LPG had a growth of 5.9%. On the top of it, the industrial products like bitumen and naphtha also recorded a growth. Bitumen and lubes also recorded a growth. So bitumen was 18.3% and naphtha was around 14.6% growth. As far as refineries are concerned, we could operate our refinery to more than 100% of the capacity. And that was another good thing. So normally, as you know, HPCL operates its refinery much higher than its design capacities. So though the actual volume was 4 million ton compared to 4.16 million ton last year, but this was more than our design capacity. Similarly, the sales volumes are concerned, the quarter sales was around 10.03 million metric ton. And as I mentioned, that was with a growth of around 2.7%.
Okay, the budget spoke about HPCL and allowing it to sell pipeline assets. Can you tell us a little bit more about those assets, size, scale, operational capabilities, and your view on monetizing them?
So HPCL, as of now, has got around 3,700 kilometers of cross-country pipelines. Basically for petroleum products. We do not have natural gas pipeline, except we have got minority stake in two pipelines, which is in joint venture with GSPC, BPCL. So we have there around 11% stake. But otherwise, we have got the cross-country pipelines of 3,700 kilometers, which basically connect our refineries to different terminals, etc. So we have got a Mundra Delhi pipeline, which connects our Bathinda refinery to port. Then we have got a Mumbai-Sholapur pipeline, which connects from our Mumbai refinery evacuation. And then we have got a Vizag-Vijayawada-Secundra pipeline, which evacuates the product from Vishak refinery. So our pipelines are more towards the operational reason and evacuation of the refineries. And all these pipelines have been operating very, very efficiently. In fact, as per the Solomon benchmarking study, which is the international standard, our pipelines in many of the parameters are in quartile 1. Now, as far as the leveraging these assets is concerned, we can always review the options that what creates better value than what it creates today. At the same time, ensuring the operational control, because that is important for the point of view of refinery. So we will review the options. It is early to immediately say and which is a better option on that.
Okay, what about the crude impact as well on the retail end? Because we're continuing to see that move higher. How's that playing out?
No, it's true that there had been a run-up to the crude prices recently. In fact, today it touched almost $59. But my take is that the crude price increase in this week or just last few days is more a result of a mismatch or perceived mismatch between the demand and supply. So what is happening is there is a recovery. The fear of COVID rebound is receding, and the economic activities are opening up across the world. And people are now started believing that probably we have beaten Corona and the chances of rebound are much lesser. At the same time, there is a voluntary cuts from some of the major oil producing countries. Then there was supposed to be the relaxation in production cuts from January onwards, which hasn't happened. Rather, there was additional 1 million barrels of crude oil production cut from one of the oil producer. So to that extent, there is a mismatch between supply and demand, and that is leading to a sudden spurt in the crude prices. But I don't think that in the longer run that will be a sustained rally, and there is more likelihood that the sustainable crude price rate will be somewhere around 55 or 52, between 50 60, but more towards 55. Now, as far as demand is concerned, there are multiple factors which are operating because the economy after the lockdown is opening up. Still, we are not that fully, we are out of work from home condition. The industrial activities and the construction activities are picking up. Of course, the rebound is quick and sharp, but still we are not seeing the full impact of it yet. So as of today, we are in a mode where the demand is growing. And as I mentioned to you that this quarter was a positive growth as compared to the previous 2 quarters. And so I don't think as of today we can say that there is a demand destruction or something like that. There is a demand growth. MS had been growing at 6 to 7% last 4-5 months. The diesel has come to the positive territory. LPG had always been positive. ATF had been sluggish, and I think it will remain for some more time till the full aviation sector gets to the normal. In the past, we have not seen a substantial demand destruction, but yes, the leisure traveling does get reduced. That is one thing. And the coming season, now the festive season may not be to that extent, but at least the marriage season is coming. The harvest season will be coming, and the highways opening up is there with the interstate travel starting. So that may give rise to increase in demand, in my opinion. And the personal travel preference is still there compared to the public transport travel. That gives a demand growth in MS.
All right, Mr. Surana, we'll leave it there. Great speaking with you this morning. Thanks for joining us, as always.